Welcome back to the channel. Nvidia just delivered another huge quarter. The results were strong, the market reaction was mixed, and it raises an important question for every investor following artificial intelligence. If Nvidia has already set the pace, which companies in the artificial intelligence infrastructure stack still offer a clear opportunity? When it might make sense to consider them, and what kind of realistic profit could be expected over the next 12 months? Today, I will walk you through 3 names I am watching closely. The first one is Nvidia, ticker symbol NVDA. Reported revenue of $46.70 billion and guided the next quarter to about $54 billion, plus or minus 2%. In its announcement, the company made it clear that this forecast does not include any sales of the H20 chip to China. If those sales eventually get approved, they could add another $2 to $5 billion in revenue. Alongside these results, Nvidia also authorized a massive $60 billion share repurchase program. Even with such strong numbers, the stock pulled back slightly because data center revenue came in below some of the most aggressive analyst expectations. The key factors to watch now are the timing of the new Blackwell product cycle, updates on possible H20 shipments to China. Analyst targets right now are generally clustered between $200 and $225. With some placing the range as low as $155 on the downside. Based on today's price, as of August 28, 2025, that translates into a possible upside of about 10.13% to 23.90% at the high end, but also a potential downside of 14.65% if things weaken. The second one is Broadcom, ticker symbol AVGO. Broadcom guided total revenue around $15.80 billion for the current quarter, and financial coverage pointed out that about $5.10 billion of that is expected to come from artificial intelligence semiconductors. That growth is being fueled by advanced networking chips and custom silicon for hyperscale data centers. The company also introduced the Tomahawk Ultra Ethernet switch, designed to move artificial intelligence data more quickly across large clusters. This development shows Broadcom's role as the backbone of artificial intelligence infrastructure, providing the plumbing that connects processors together. For investors, this means the opportunity is tied directly to how much cloud providers continue investing in artificial intelligence buildouts. Analysts currently set 12-month targets close to where the stock trades today, averaging around $300.96 to $310.32. That implies only a modest upside of about 0.24% to 3.35%. The stronger potential comes if you catch the stock on market pullbacks when sentiment cools. The final one is Supermicro Computer, ticker symbol SMCI. Supermicro's most recent results were weaker than expected, and the stock sold off as a result. However, the company still guided revenue of at least $33 billion for fiscal year 2026. Which was above many analyst forecasts before the report. This guidance shows the scale of demand that Supermicro is targeting as next-generation servers and liquid cooling solutions roll out. This company offers a very direct way to participate in the artificial intelligence build-out. It sells the rack-scale systems and infrastructure that support Nvidia's chips. The catch is that execution, supply conditions, and margins are all volatile, which makes the stock high risk and high reward. Street Research currently places the median 12-month target near $37.97, which is below today's trading price. That implies about a 15.17% downside from current levels, showing that analysts still want more proof of execution before becoming more positive. The risks that run across Nvidia, Broadcom, and Supermicro include potential slowdowns in capital spending by cloud providers, regulatory uncertainty related to China, and supply chain delays. Any one of these can shift investor sentiment quickly. To sum it up, Nvidia continues to lead with $54 billion in next quarter guidance and a $60 billion buyback program. Broadcom is benefiting from about $5.10 billion in artificial intelligence semiconductor revenue and remains the critical networking backbone. Supermicro Computer is targeting at least $33 billion in revenue for fiscal year 2026. But it carries much higher volatility. That's it for today. If you found this breakdown helpful, make sure to subscribe for more researched stock opportunities every market day.